To operate at the scale of modern international trade, a manufacturer's digital ledgers must perfectly mirror the movement of physical cargo in real time. When the physical supply chain and the digital data fall out of sync, the result is immediate logistical bottlenecks and severe financial penalties during customs audits. Traditional accounting software and isolated spreadsheets like Microsoft Excel are simply not equipped to process the sheer volume of variables generated on an active factory floor. These legacy tools fail because they cannot dynamically classify the cost of goods sold across multiple concurrent stages of manufacturing. Without that dynamic classification, critical discrepancies emerge between the raw materials sitting in the warehouse and the numbers reported on the balance sheet. To solve this, modern accounting information systems have evolved past isolated financial tracking. They operate as comprehensive enterprise resource planning engines that dictate the entire supply chain flow and autonomously handle customs compliance. Surviving in highly regulated manufacturing hubs requires completely abandoning fragmented financial ledgers in favor of a single, centralized operational data spine. This is Batam, Indonesia. It operates as a highly regulated, dense industrial hub where the tolerance for data misalignment is virtually zero. We can look at PT Tektron Manufacturing as a baseline model for how a flawlessly integrated operational and financial system functions in this environment. This diagram maps PT Tektron's master business process architecture, tracing operational data flow. The sequence begins at the Singapore head office, which receives the customer request and generates the initial purchase order. That order data feeds directly into the Batam facility's purchasing node, where the system automatically cross-references the required materials against current supplier prices. Once the physical materials arrive, the warehouse, or store, logs the receipt, instantly updating the central inventory database. The system then cues the material handle department to pull and prepare the exact material quantities needed for the active production line. After assembly, the finished goods move back to the store, prompting the shipping department to automatically book container space for the outgoing physical cargo. In the final step, the accounting node generates precise billing and invoices as a direct, automated byproduct of that physical shipment leaving the facility. This continuous data relay from the Singapore office to the Batam shipping yard removes the need for manual data entry at each transition point, eliminating the fragmentation that plagues traditional systems. Facilities like this often operate inside specialized regulatory environments known as bonded zones, or kawasan berikat. The financial incentive for operating inside a bonded zone is significant. Companies are exempt from standard import duties and taxes, or PDRI. To secure those tax exemptions, the government mandates a strict condition. The manufacturer must implement a highly specialized, auditable IT inventory system. This illustrates the connection. The manufacturer's ERP establishes a continuous host-to-host API data bridge directly into the CISA 4.0 customs database. Through this API, the ERP autonomously generates compliance documents, starting with the BC 2.3 form logging incoming items. It must also generate BC 4.0 documents to track the internal movements of goods between different zones. Finally, it produces BC 3.0 documents, which are required to authorize the final export of the finished goods. Specialized software platforms like Ukarama or SmartOne are engineered specifically to format and synchronize this exact array of documentation without requiring human prompting. Achieving maximum throughput on the factory floor yields no advantage if the software cannot autonomously satisfy these strict government compliance audits. But software architecture is only half the equation. The physical reality of the factory floor introduces a highly volatile variable. In the case study of PT Gelflex, we see that even with advanced inventory systems actively running, the physical stock counts and the digital records can still fall out of alignment. The root cause of this misalignment is human input error. When a worker enters incorrect material usage data at the production level, it overrides the logic of the entire ERP pipeline. This 3D regression chart maps the three specific variables that dictate whether a system succeeds or fails: technological progress, management knowledge, and user participation. The first variable represents the software's processing power. The second is management knowledge, requiring leaders to align the software's technical features with broader business strategy. The third is user participation. The data proves these variables must interact simultaneously. If any drops, critical mismatches occur, regardless of software quality. Pouring capital into technological capability cannot solve supply chain bottlenecks without rigorous organizational training and human alignment. This visualization brings the entire architecture together. A successful modern accounting information system functions as a completely closed-loop structure. Purchasing, production, shipping, and accounting no longer operate in isolation. They are simply specific nodes communicating along a single real-time data spine. Maintaining the integrity of this spine is the only mechanism that protects the firm from total supply chain paralysis. It is also the only mechanism capable of shielding the operation from severe customs audit penalties in regulated zones like bottom. Deploying a modern IT inventory system provides the baseline capacity to process this data, solving the purely technological constraints of the business. But unlocking the true return on that software investment requires comprehensive and continuous management training. It equally demands rigorous integration and participation from users, executing tasks directly on the factory floor. A fully synchronized, highly trained environment functions at a scale and speed that manual, error-prone spreadsheets can never replicate. An enterprise software system is only ever as robust as the organizational framework supporting it. True competitive advantage in international manufacturing relies on the flawless synthesis of physical logistics, digital compliance, and human expertise.